Hello, this is Coach Mike from WinningStockCoach.com. I'm going to get started with my weekly market overview for the trading week ahead, the week beginning January 12th, 2015. One thing I want to start out with is something that I covered in our chat room for members of the coaches roster on Friday. And it's something that it's kind of a common mistake people make many, many times. And I want to tell you that it's, again, not trying to convince you market will go up or market will go down. It's trying to convince you that there are certain things you can look for to help you trade it better no matter which way it goes. So that's what I'm going to do here. And what I'm going to kind of reference is the weekly candle from this past week on the S&P 500, the SPX chart. And if you look at it here, you see this large lower wick. It's actually, you could pretty much call it a hammer candle. And one common mistake people will always make is they'll look at another point and go, you know what, right here, the week of October 13th, we had a large red hammer candle, and man, that was the reversal point. Boom, there we go. Well, I want to take you, and I'm going to zoom in on this chart, and you're going to see why here in a second. And you see with the time frames I'm talking about, this candle right here, this candle right here, and it makes people look at it and say, well, shoot, if it does that again, here we go. Well, I want to take you back to that time right there. You'd had a pretty large fall, 4 weeks of fall, and then you turned around. Now, obviously, when you're talking about candles, the body of the candle on a red candle, the top of that body was the open, the bottom of it was the close. And on a green candle, the bottom's the open, the top's the close. Well, one thing that presented itself really, really well was the following day, you didn't have much of a gap, if any at all. And you fairly quickly, throughout that week, continued in the direction it was going to go. So it wasn't necessarily the hammer candle, it was the following candle. And let me tell you why this is important, because there'll always be those people who's like, well, but if you would have bought down here on this wick when it's down here at these lows, that's where you should have bought. But let's look just 2 weeks prior to that time. You see, this is that week that it did reverse off of, but just 2 weeks prior to that, right here on the chart, here's a red hammer candle with a large lower wick after just one down week before it. And the next candle opened up with little gap whatsoever to the previous week's close and quickly continued in the direction it was going to trade in. You see that week that many people would look at here and say, oh, look, it reversed off of that. They fail to see what it did in a similar situation. And the similar situation is actually to that first hammer candle. You see, you had one down week and then the continuation with a large lower wick, one down week with continuation and a large lower wick. Now, I'm not saying it's going to be a week that continues downwards, but I'm saying that trading the direction of this week might be pretty helpful to you and would be the exact way that I would approach the trading week myself. And I say that because it's something that we see regularly. People think that a hammer candle guarantees that it's going to turn around. Those people usually were misinformed. I won't say they're foolish. They're usually just misinformed by somebody that was foolish, and they believed it. So anyway, last week we talked about a target area, 1986.64. And, you know, those of you that stick with this series of videos that I do each and every week, you'll see that now with coming within 0.5% of that mark, we've had 50 consecutive market highs and lows that we've been within 0.5% of calling the value. It's just pretty good. I mean, 0.5% is not very much, and 50 in a row is definitely pretty good. And that's why the recent trades we have posted at WinningStockCoach.com are the way they are, because we're pretty darn accurate. So what I would look for in this upcoming week, because if you remember last week's video, I said even though I believe it's more probable to get down to that 1894.95 area, I was having you focus on the 1986.64 because a lot of things don't go straight down. A lot of things will come down, make a little bounce, and then make a consecutive move. And that's what I think if we make an up move, we'll have to look at. I'm still sticking with the same plan for potential longs as I had last week, and actually that I've had for a while. I've got to break that 2102 target. Until I break that 2102, which has been a longer term target area that I had on it, I'm not really interested in long positions. But I'm not interested in short positions just for the sake of money burning a hole in my pocket. So let's be observant of what the charts actually do, not what we think they'll do, and be prepared to make money off the associated trades. Over now to the DJI, that's the Dow Jones Industrial Average. Well, pretty consistent with what we talked about last week for that downside target, 17,179.85. We didn't quite hit it, but we definitely came within 0.5% of it. And again, I think that the direction of this week's candle is going to be what we need to look for, because again, down here is like, oh, look, there's that hammer candle and it reversed off of it. Don't fail to look 2 weeks prior to that where you had a hammer candle that followed only one down week and then still continued down. And though either of those scenarios are pretty possible with this upcoming week, understand that it was the direction of the weekly candle that followed the hammer candle that led you into the continuation up or down. And let's look for that. And remember, stocks fall faster than they go up. So that's why when they are going, it doesn't necessarily last very long. Just a couple weeks of continuation and boom, back to the upside. And until we break that trend of an upwards moving market overall, then we need to at least give credit to the fact that that is what we're seeing is overall every move, doesn't matter when it goes down, it goes back up. So that's one thing we want to look at, but let's understand that it's the continuation candle, which is this week's candle, that's going to make a big difference. This is also the week we're going to start seeing some financial stocks report their earnings. I know Goldman Sachs is Friday. You got a few others coming in throughout the week, but this could be a pretty important week for where the market goes from here. On the RUT, we talked about how last week could have just been, or the prior week could have just been since it was a holiday week, a meaningless candle, and then we'd have to see where this week went. And then we talked about not going short unless we broke below 1152.45. Well, we didn't break below it, but that's still our support point. And quite literally, I think the Russell 2000 needs to prove a little bit more as to which way it would go before you convince yourself of a long or a short in the small caps. I would quite literally personally let it break the 12.15.21 to the high side, or let it break the 11.52.45 to the low side before taking a long trade for an up move, short trade for a down move. And I quite literally just wouldn't even concern myself with small caps until we get that. And finally, the NDX, the NASDAQ 100, a little bit of a holding pattern for it. We did retest early in the week that swing point that we had retested a couple weeks prior. But, you know, we do have this lower high right here, but we didn't give up our low right here, this 41.9928. You could say, well, yeah, we did give it up, but we talked about needing to give it up for the weekly close. So let's still watch that 41.9928 for the weekly close to get below there. And quite literally, I'd say if we make any move below this little tweezer bottom, these two wicks that were down here, so if we give up this swing point of 4,100, then we might have to start thinking that we're going to see some of them NASDAQ stocks start to curl over. We saw it pretty bad the past couple weeks with Apple, which had a nice pop up for a couple days before kind of just having a wishy-washy day on Friday. But still, to this point, made a lower high on the daily after a lower low. So it could just turn around and get ready for the next fall. So we really got to wait until we give up these points, these support points, to see if we're going to get that fall. And then otherwise, as you can see, you're in a consolidation pattern here. So let's let it break the consolidation. The breakout play for a momentum trade is going to be much, much more in your favor. Try to keep the market overview video a little bit quick this week. Actually had quite a busy weekend personally. And I think we're going to have quite a busy week ahead as well. So God bless in the upcoming week. Best of luck with your trading. Those of you members of the Coaches Roster newsletter, I'll be in the chat room with you during trading hours as always. And I will see you tomorrow morning.